Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Eurodollar, a reactionary bearish opening black Maribosa yesterday after the previous sessions of bullish white soldiers. Prices dipped and closed below the following: the middle time currently at 110.20, of the purple late June to start of August bullish Andrews pitchfork, the very important dark blue July 2017 to November 2018 head and shoulders neckline currently at 109.94, and the bright red upper time currently at 109.81 of the mid-April to early June shallowly bullish shift pitchfork. The market dropped down to just short of the next support, which is the 50% Fibonacci line of the January 2021 to September 22 move at 109.44. To test this seems to have been a step too far for this market after the previous session's attainment of target X at 110.40. This move lower has not signaled the end of the current move higher, just tempered it. There's still one question I have left in my mind from yesterday, and that is the action from March to date a possible double bottom? I hope to have an answer soon. Now, so far today, a small reactionary move back up over the bright red upper time, but no more than that, and we're back below as I speak at the moment. Cable, aka sterling against the US dollar. An immediate countering bullish harami yesterday after, if only just, as well as an outside day. This is after the previous session's bearish dark cloud cover pattern. The dip went as far as just shy of the short medium moving average currently at 127.89 before pulling back up just over the November 2020 low at 128.52, but not quite managing to close over it. However, prices did manage to close up over the lower time currently at 128.47 of the broken mid-April to late June bullish shift pitchfork. Overall, we are still above the dark blue upper trend line, currently at 127.36 of the mid-July to date bear channel, and the break higher from this has a target X in the 129.35 area. Yesterday's action was a seeming reaffirmation of this idea. It was, as I said on Tuesday, and I quote, "So all this looks very interesting on the upside, but it needs prices to stabilize over all three of these resistances that are in the process of being converted into supports." End of quote. Looking further up, beyond target X at 129.35, we have the middle time, currently at 130.09 of the broken bullish shift pitchfork. Now, so far today, a move up from the open, over the November 2020 low and up into new topside territory for August. Euro sterling, a strong reactionary bearish double yesterday to match the previous session's strong reactionary bullish long white Maribosa. Prices gave up all their bullish gains in the previous session and then some, punching down through and closing below both the long moving average currently at 85.49 and the important combined lows of December 22 at 85.45 and December 2023 at 85.47. Now, prices stopped short of testing down to the bright red neckline, currently at 85.23 of the May to August 2022 head and shoulders continuation pattern. Below this, we have the roughly flatlining medium moving average, currently at 85.09, and a very recent 50% Fibonacci line at 85.03. On the contrary side, there is still the possibility that late July today action could possibly be a very large bull flag, but it seems remote right now. So far today, a continuation lower, testing the bright red neckline, penetrating it but not stabilizing under it as yet. but is approaching the flatlining medium moving average. US dollar against the Japanese yen. A bullish closing white Marubozu yesterday, as well as a second bullish white soldier. The market punched through and closed over the lesser Fibonacci line at 148.68, but got stuck at the next lesser Fibonacci resistance at 149.39. Primarily, I think, just because above it is the 50% Fibonacci line of the July 2023 to July 2024 move at 149.61, so that's a 1-year pattern. Beyond that, and we are starting to run into a whole series of resistance, notably the broken purple lower time, currently at 150.23 of the February 22 to January 23 bullish shift pitch hook, and then a grouping starting at the gold long moving average, currently at 151.38. Now looking below, well, we have the lesser Fibonacci line at 146.69, but there's not much until the 50% Fibonacci line of the January 23 to July 2024 move at 144.58. Over all of this is the shadow of last month's key reversal down. Now so far today, more resistance at 149.39, and the market has pulled back down to test that lower, lesser Fibonacci line at 148.68 at the moment. US dollar against the offshore Chinese yuan, the CNH. A bullish long white Marubozu after the previous session's indecisive doji cross. However, we take the last 3 sessions together, then we have a 3-day bullish morning doji star pattern. The question now is whether the market will take notice of this 3-day pattern. In the meanwhile, yesterday rose up and closed over the lesser, very recent Fibonacci line at 716.95, but stopped short of trying up to the next resistance, a significant resistance, consisting of the very recent 50% Fibonacci line at 719.65, as well as the May 2020 high at 719.64. Looking below, we have limited support, but until the lesser Fibonacci line at 711.61. But I doubt if it is really robust. I think you would have to look at the low at 708.22 if this market really starts moving lower. All of this is in the shadow of last month's monthly key reversal down. So far today, a pullback down to the lesser Fibonacci line at 716.95 so far. US dollar against the Mexican peso. A third bearish black crow yesterday, almost another bearish closing black Marubozu, but in my view, not quite. More importantly, the market broke out and below recent short-term imprisonment between the combined overhead resistances from the March 2020 low at 1915.03 and the 50% Fibonacci line of the November 2020 to April 2024 move at 1920.38. And below by congestion at 1885.40 and 1879.15. Indeed, the congestion at 1885.40 served as a cap to the market. However, the drop was not by much, only as just short of the lesser Fibonacci line at 1859.72. Further below, we have the combination congestion zone 1850.81 to 1851.71, containing the February 2020 low at 1851.71. In the overall picture, we remain within the bright red mid-May to mid-July bullish shift pitch fork. We are right now in between the overhead middle time, currently at 1931.11, and the lower time below, currently 1829.86. Additionally, the short medium moving average, currently at 1835.62, is nearby, just above the lower time. So far today, a small reactionary attempt higher, but not really going anywhere as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.